Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and if you guys are looking for undervalued investment opportunities, click subscribe, join our community, ride this commodity bull market up with me and everyone else in our community. So I know we were talking a lot about uranium and the price peak of uranium. I wanted to go back and take a look to see where the ratio of the uranium to gold ratio was peaking at in relationship to the price of gold and try to get a good timing of it, like to see where the timing was in relationship to its peak. So I did some calculations. I wanted to see where a potential peak could be for uranium. These numbers, I think, are much more reasonable, and I think they make a little more sense than taking the peak of gold and then doing the ratio to the peak of gold, because the uranium ratio did not peak when the gold price peaked. It peaked earlier on before the gold price peaked. So I want to go through some analysis, and you can kind of see where the peaks are. Doing some just rough numbers, rough calculations, and they're probably not going to be right, but you can get an idea of where a peak could be. Just an idea, like a big range. So let's jump in. I'll show you what I've got. So I've got the gold to uranium ratio. The ratio is pounds of uranium per ounce of gold. That's this axis here, and this is time. I used a ratio of 1 to 5. So 1 to 5 is about right here. It got below that in 76, and it was probably pretty close to that in the 2007 era. And right now, we are at 61 pounds to 1 ounce gold. We're off the chart in terms of how cheap it is. So looking at it from a ratio perspective, uranium's never been this cheap. It's an anomaly. And we are going to project, if this were to come down, what that would look like. Now, coming from this peak over here, this guy here went from like 74 to 76. So this was a very fast decline in uranium price. It only took a couple of years. From the peak here, from this peak, it was 92 to 2007, so that's a 15-year time frame. If you came from this guy here, which is 03 to 07, which is a 4-year time frame, that's pretty fast. So I'm going to do some numbers, and I'm not saying that they're necessarily correct, but let's just play it and have some fun. So this guy is going to have to come down quite a bit all the way to get to 5. I don't know how long that's going to take. And I think the length that this takes also will determine where it falls in relationship to the price of gold. So here's the price of gold. I've got the red circle indicating the bottom of August 2007. The red circle's on the lower left over here, indicating where the price of gold is. It's about $650 an ounce. So it was not near the top of 1900. It was pretty early in its cycle. Now, we're starting to come on up. I did some calculations. I took the bottom of the cycle in 2000, and then I did a calculation to figure out where this is in a percentage wise of this entire move. And then I'm calculating this, basically the entire move from this low here. And I don't know if that's the right spot to pick. You could argue that it might be this one, and that would change the numbers quite dramatically to the upside. But I chose this guy down here and said, well, let's try to calculate what it is if the entire move is roughly XYZ. So let's look at my price prediction of gold and uranium. So the gold price, looking at the given from before, the $650 gold price in August 2007 is when uranium peaked at a ratio of about 1 ounce gold to 5 pounds uranium. Gold price went from a bottom of $260 an ounce roughly to a top of about $1,900 an ounce. It's a $400 per ounce move higher in gold of a total move of 1,640. So if you did 650 minus 250, it's roughly a $400 move higher off the bottom is where 650 is in relationship to a total move of 1,640, which is 1,900 minus 260. This divided by this says uranium peaked in the price of gold at 24.3% off the move from the bottom of gold. So we can use that to kind of gauge, this is what I'm using to kind of gauge a rough estimate, because if it falls within 25% of its peak, we can figure out kind of roughly where it's at. So uranium price projection, bottom in gold is about $1,100 an ounce. I'm going to use the same 24.3% off the bottom. If we peak at $5,000 gold and you use this 24.3%, you subtract the two, multiply it by 24.5, and add it back to 1,100, it would say that the ratio would peak at 2,047 an ounce of gold. That's where it would peak at. And the price of uranium would be $409 per pound. If you use $10,000 gold price and you use the 24.3% off the bottom, the gold price would be $32.62 an ounce. Divide it by 5, and that's a $652 per pound price. That would be at like a maximum peak. If gold were to get to 10,000 and it hit a 1-to-5 ratio at a $3,262 an ounce gold. I don't know which one's more likely here. I don't know if it's like 409 or 652. I think that's in the ballpark. If you were to ask experts, they'd probably say between $300 and $600 a pound. As a maximum peak. All right. I'm not projecting this stuff. This is just taking numbers in history and trying to come up with a rough estimate. So if gold's at 2,000, it's $409 a pound. That if it goes to a 1-to-5 ratio. If it's $32.62 an ounce, divided by 5, it's $650. Now, I don't think this thing, maybe it's going to shoot higher and it's going to be ridiculous and it does it in like 2 or 3 years. I don't know. 2 or 3 years from now, I could see a price of $3,262. That's I think possible 3-4 years from now. So I think the price could be $500 a pound or somewhere between $400 and $650. What does that mean? I mean, if we calculate this real quick, if it's 500, I'm just going between it, divided by 30. I think we're at 31, right? That's a 16x increase. And then if some of these miners do a 5x of that, you could get an 80 times your money on some of the investments that I think are higher yielding investments here. 80 times your money. So I think that's probably more of a likelihood that some of the better gainers in the sector could be 80 or 100 times your money. If you can pick some good ones. Some of the bigger companies I don't think will grow that much. They're too big. So that's kind of my estimate. I mean, a CCJ, that I think could match the price of uranium. Maybe it goes up 16 times, which is really good. Some of the other ones, if it's a 16.12, so 16 times in uranium price, let's say some of them do like a 3x, so that's 48 times your money. That's a really good return, really good. And that's only if you can time this stuff to its peak to the nats, and the price goes that high. Now, if the price goes a little bit lower, let's say it gets to $300 an ounce, not 300 an ounce, $300 a pound. We'll divide that. That's roughly 10 times. We'll call it a 10x. So let's say Camco would get somewhere around there, like a 10x or something, or some of these bigger companies. And then if it's like a more leveraged company, it'd be 30 times or 50 times your money. Is like a really good kind of company that goes pretty crazy. So I think this is more of a realistic return with some of these mining companies versus what we were talking about earlier. I wanted to go back and do some calculations and see where this thing hit roughly. Now, is it going to hit the same time? I don't know. I don't have those answers. I don't know if it's going to get down to a 1-to-5 ratio. I don't know what the price of gold will be at that time. I don't know any of this stuff. Like, no one knows it. These are all estimates. But I think there's a high likelihood that it gets to some of these prices. Why? That's just what history's showing us. It'd be history repeating itself over and over again. For it not to hit this price, it would be history not repeating itself. It would be a soft correction. Now, you could argue that the downside or the ratio was so far out of whack that it's going to go out of whack to the bottom. So, I mean, there's a possibility that it does hit $1,000 a pound. Possibility. I'm not stating that. I'm not claiming that, but it is possible because it's so far to the upside. It 60 pounds to one. It's never been that cheap, and usually when it overshoots to one side, it wants to overshoot to the other side. So if you get a price of 3,000, if you've got $3,500 gold and you divide it by 3 because it overshoots, $1,166 a pound. This is just history repeating itself. So it very well could be anywhere between $300 and $1,000 could be a peak of uranium, and anywhere it falls within there, the returns are going to be spectacular for uranium mining companies. If you guys like this content, please give me a thumbs up. Thank you for listening. This is Finding Value.